panel is about DeFi, and we have Joy from ABCDE as the moderator, and Dada from Dodo, and Cam from Pando, Rick from Gains, Jesper from Panoptic, and Mourad from GSR as the panelists. Yeah, it's our final panelist. Also, thank you again for staying so long. Also, I would like to remind the people in the back to keep your voice low, to be polite, and also get ready for our final panel right now.
Moderator, thanks. All right. Hey, everyone. I know this is a super long day, but I hope you enjoy all the panels here. Today we have a lot of panelists here. How about before we start our session, please give a little bit of short introduction of yourself as well as your project.
Hi, everyone. I'm YaoYao, the research lead at Dodo. Dodo is a DEX-based PMM algorithm, and we are trying to provide the best on-chain liquidity with market making strategy. Excited to be here and discuss with all you guys about the new DeFi trends. Yeah.
Hi, I'm Ken. I lead the institutional business at Pendle. We provide a market for fixed rates and yield trading in DeFi. And we support different types of underlying assets, including ETH LSDs, perp DEX protocols, as well as real-world assets.
I'm Rick. I'm a core contributor at Gains Network, which is an on-chain perpetual futures exchange. We allow you to trade crypto, forex, and commodities, crypto up to 150x leverage, and forex and commodities, forex up to 1500x leverage, and yeah, we have the most capital efficient system, I would say.
Hi, my name is Mourad. I work at GSR. I've been there since 2014. GSR is a crypto market maker, liquidity provider, initially on centralized exchanges, but more and more on decentralized exchanges, and that's where my focus is.
Hi, I'm Jesper. I'm very excited to be here. I'm co-founder of Panoptic. We're creating perpetual options that are Oracle-free as well and can run on Ethereum mainnet. So we've invented a new way to bring basically options to decentralized ecosystems that are entirely permissionless as well. Very excited to be here. Thank you.
Yeah, great. It looks like everyone is in this space for a long time, and we know in 2020 we have DeFi summer, and after DeFi summer we see a explosive growth of DeFi protocols. Just wanted to know how do you foresee the future of DeFi? Do you think there is going to be another DeFi summer later in this 1 or 2 years? What's your opinion on that?
Yeah, as you can see, since DeFi summer, many DeFi developers are actively exploring and building more services for the ecosystem. So now DeFi world has gotten way bigger in terms of TVL, number of users, and other protocols out there. Yeah, in my view, in the short term, with more and more assets remain unused in the industry, and people are finding ways to earn a steady income. So DeFi has gradually shifted in two directions, inward development like LS DeFi, and outward development like RWA. Yeah. If there will be a DeFi summer, I guess I believe it will. I believe we'll get there. And if we talk about the future of DeFi, maybe I think I hope one day DeFi can achieve the thing described by the intent narratives, basically like users no longer need to switch chains frequently, jump different platforms, or send multiple approvals in a row. Yeah, we know how frustrating it can be. Yeah.
So I think we've come a long way from DeFi summer. A lot of unsustainable sources of yields in 2020. Today, obviously, a lot of that has changed. We have real infrastructure that we can use with money markets, with perp dexes, which also leads to real sources of yields. You know, post Ethereum's Chapella upgrade, you get ETH staking yield that's becoming more and more ubiquitous, and then you get you know, GMX and Gains that were providing LPs with real sources of yields. So I think where we are today is that we're seeing more and more financialization of those yields. And that's what one of the use cases that we do at Pendle. In terms of the future of DeFi, I think we'll probably see more integration of DeFi into mainstream centralized platforms, especially post Luna, post FTX. I think there's more and more need for non-custodial services that basically serve as the plumbing into most of crypto.
Yeah, so I think since the DeFi summer in 2020, we've definitely came a long way. I would say it was a time when money was cheap, and you know, when the new asset class and it's exciting, you can kind of like go into this like rampant speculation mode. But yeah, as Ken mentioned, like a lot of it is like based on hype and no real yield. So for example, at Gains, we basically found like real product market fit where people are actually like willing to pay a price for the product that they're using without incentivization of tokens. And I think this is a very powerful thing because we finally see like the real strength of DeFi here. Like there are innovations that you can build on blockchain tech that haven't been possible before. Like for example, we recently pushed the lookbacks update, which allows you to have like guaranteed order execution on chain, and this would only be possible in a deterministic settlement layer like a blockchain. So that is like an innovation that you will not see in Web 2. Not even Binance can do that. Only we can as of now. But we'll likely see copycats soon, maybe. We don't know. And for the future growth of DeFi, I think there's like a fast way and a slow way. The fast way is probably like, okay, we're in a high interest rate environment. Something breaks down, people feel unsatisfied, and they just like all go through to DeFi because it's the only option. And the slow pace is, okay, we just keep on iterating until the efficiency of the system that we're building outpaces whatever efficiency the legacy system is lacking, and then people will just slowly move over.
I do think that DeFi is, the cat is out the bag and it's here to stay. I don't think it's going away anywhere. In terms of like actual TVL, I think, you know, during 2021, 22, it may have been a bit too inflated with the tokens and the food coins having, you know, extreme values and stuff like that. But I think, you know, like the building blocks, most of them came early on in DeFi. Some newer ones came a little bit later. Specifically, I'm thinking of like a protocol-owned liquidity and stuff like this, which is it's something new that you probably aren't seeing in TradFi. And I think it especially serves a purpose for long tail assets and stuff like this, where you know, like you probably won't have as developed markets for them. So I think it's got its place.
Yeah, a lot of stuff has already been said, but I personally take a very long-term view on the ecosystem and the industry. And you know, when you kind of zoom out, I just think it's super apparent, at least that's my perspective, that kind of paraphrasing Mourad, but like the genie's out of the bottle. I mean, we're not going to go back on this. The technology is there. I think we're just experiencing kind of a natural evolution of just exploring what's possible, and unfortunately that has led to some like scammy things. It kind of always has in history when a new technology has come around, but I do think what we're seeing is an underlying trend that is like up to the right, which is, you know, things are actually being built on the back end. It's just not going as fast as the hype cycles, because at the end of the day we can't build as fast as our imagination can like take us. So the hype cycle kind of follows the imagination and gets a little bit depressed when it doesn't quite come to fruition yet. But we're going in that direction, and the future will run entirely on blockchain in like 99% of the cases. That's my perspective. I have no doubt about that. We do need to do a lot of evolution with the technology, but we'll get there over time. And anything, health tech, supply chains, finance, of course, everything will run on blockchain. I've just no doubt about it. So I'm very bullish long term on everything. But there is some noise and there's some cycles we got to go through. But I think we'll have a few more cycles too with like CK technology and maybe, you know, things like RWA. Who knows? But you know, there are going to be other hype cycles.
Yeah, I think you have a strong belief in DeFi, and so you definitely, like, the answer to the question of do you think DeFi will eventually replace the bank system? So your answer is, Jesper's answer is definitely yes, I guess. What about the others?
I think there's challenges. I mean, the further out you look, the more and more likely it is. But I think in the short term, there's definitely challenges. The one that comes to mind is most on-chain DeFi like financial products that are out there are usually over-collateralized rather than under-collateralized, which is a very common thing in TradFi. So there's ways to get there, maybe proof of personhood and KYC and stuff like this, or credit risk and credit scores. But I think it's moving in that direction. But yeah.
Yeah, I have my own. Yeah, I definitely agree on the credit stuff. Like, I know that we hate under-collateralized lending in DeFi, but like no ecosystem can grow without under-collateralized lending. Like, you just need good credit markets. So I think that will be, once we figure that out, I think that will be like a major push for growth as well. And yeah, we just need to we don't have all the infrastructure yet, but I think I know the smartest people that I know are basically working on building out the infrastructure that we need to have, for example, governments be comfortable running their rails on a blockchain backend. And I mean, the internet has been around for 35 years, okay, as we know it, a little bit longer maybe, or whatever, 35, 40 years. And we're just at the start, basically. It's going to integrate into our lives so much more, and it just seems insane to me that in 20 or 30 years, we'll still be running the world's financial system on legacy banking tech. No, that's not going to happen. It needs to be something else. And I think it's going to be DeFi, so for sure, yes.
Got it. Then I have another question regarding one of the challenges in DeFi is the mass adoption, right? So I wanted to know, maybe from Ken, from your perspective, how do you onboard more institution users or retail users to use your protocols?
I think for retail, it's quite straightforward in the sense that a lot of the DeFi mechanics is quite cumbersome still. So getting into DeFi, getting assets onboarded, figuring out what the basic OPSEC looks like, I think that's all is still quite an obstacle, and it needs to be abstracted away. With regards to institutional clients, there's an element of operational hurdles as well, but I think more importantly, the availability of risk reporting tools. So how do you manage risk? How do you measure them? And I think a lot of the risk in DeFi is still quite hard to measure, especially when it comes to smart contract risk, when it comes to risks that are basically binary in nature. You can't assign a haircut to that. So that's going to be quite challenging for the time being, although I think in this bear period, there's a lot of infrastructure projects that are being built to solve all these problems. But for now, what we are doubling down on is, at least on the education side, not only on our product and how our markets work, but also just best practices that we've seen from other institutional clients.
Yeah, I like Pando, you have different version, right? You have the concise version for retailers and you have a little bit more complicated version for institutions.
Yes, we do have two front ends. Panel Earn that is more geared towards retail users, a simple way to long fixed rates. And we have Trade where the market is a bit more sophisticated and you have the ability to go both sides.
Yeah, that makes sense. How about Jesper? What's your idea in terms of the mass adoption?
I think a few things have to happen. So one is really we got to overcome this regulatory kind of monster, if you will, which is just really hindering a lot of growth in the space. And obviously there's some shadiness going on there. But once that clarity comes around, then I think we'll see a lot more kind of inflow of capital and interest in the space. That's one thing. The other thing is also, I mean, security. We really got to like step up in general, the security of these smart contracts, because the hacks are, it's just too much, you know, right now. Like we really do need to figure out a better way. And that comes through just better tooling, better education of our engineers and so on. And then I think also, just we got to make it more user-friendly for retail as well. It's still a little too advanced to use for many folks. So to really get that broad adoption, I think we got to make it at least as easy and simple as kind of like where fintech, right? Like so fintech has made the UI experience of TradFi very, very simple, but where fintech is not going to be able to keep innovating and iterating is they have the fundamental limitation of the rails they're running on is this old financial system that still codes in COBOL, and like there's only 2 engineers at a bank that's allowed to touch the code, right? Because or else everything breaks. This is not the future, obviously, right? So what blockchain brings is kind of what fintech wanted to do, essentially, right? So maybe we even need to rebrand to fintech because that's kind of what we are. But you know, if you can kind of take the UI of fintech and keep iterating on that and put it on the rails of blockchain, I think that's going to be important too, because that's what the users are used to. So when you start having this lock-in and the hex address and all this stuff, they're kind of like, what am I doing? So, you know, I think those are kind of some broad things that need to happen.
Yeah, I think like all of you touch base on from the regulatory perspective, but do you think like the DeFi protocol can be really can be regulated by the government or by, you know, someone else? Maybe this question goes to Mourad.
Yeah, this is a difficult one. I think there's a lot that we can do, and that many projects in the space are doing to be like self-regulatory. But I mean, ultimately, regulation means that it's an authority. It's usually a government, and it does seem like some games or something are going on. It's very difficult. I know that. A lot of people that we deal with are on the sidelines, you know, until there's some clarity around that. So, yeah, it's a difficult one.
Yeah, got it. How about YaoYao?
Personally, I would say regulating a decentralized system is inherently challenging. Yeah, but it's not impossible. Yeah. I mean, regulators can focus on the on-ramps and off-ramps where the fiat money enters and exits the DeFi ecosystems. Additionally, developers and project leaders, they can make sure that their platforms adhere to the local regulations. But generally speaking, it's a complex issue, and the approach will likely vary by descriptions. Yeah, descriptions. Sorry.
Yeah, Nick, how do you think?
I think it can be regulated. It's just that, in my view, a lot of people that work at government are pretty, like, a little bit mid. And I think if you have, like, the government has no way to attest whether or not civilization can like rely upon ZK proof. So for example, with DeFi, a problem is like no counterparty risk is great unless the counterparty is a sanctioned entity. So how do we know that the counterparty is not a sanctioned entity? Well, we can use ZK proofs, but you know, nobody at government will like, at least that I know of, is like actively pushing for this type of technology because they know it works. So it's kind of like a chicken and egg problem where government doesn't know if we can rely on it, and we can prove that we can rely on it without the regulation. So I think the way forward is like maybe some type of special economic zone where, you know, DeFi people can just mess around and figure it out. But I do think that is what it requires. Like it needs some type of break in a positive way. Else it's going to take a very, very long time. But we'll be here. So.
Yeah, sometimes black swan events actually push the industry forward to some extent. Yeah, I'd also love to know more about like the real world assets and how DeFi is utilized under the scenario of real world assets, RWA. Anyone has an opinion regarding that? Maybe Nick?
I do have an opinion. I think real world assets are going to play a very important role. However, the domain model of a blockchain that we're working with is pretty limited. So, like, how do you express like a complicated legal contract on chain? Right now, it's pretty much impossible. So you would need to have like some natural semantic language and data attestation that you can like prove and that this contract is like legally binding, and there's some type of way of enforcing this. And I think there are definitely technologies being built that like allows us to have more of this capabilities, like account abstraction, where you can build like permissioned wallet, like some permissioned wallet where you can enforce more complicated contracts than we can now. But yeah, the real world needs to go on chain. 100% that will happen. But we just need better infrastructure for it, I would say.
Yeah, that makes sense. I think a lot of banks, they actually, you know, wanted to enter this sector because they already have the, you know, evaluation of the collaterals as well. So they wanted to, like, I talked to one of the banks from Standard Chartered, and then they wanted to see more about the best practices of RWA and how this, you know, how things could work. Maybe, how about like, Ken, can you give us some examples?
I think RWAs has a very strong PMF in the sense that there are a lot of assets on-chain managed by, let's say, large entities like DAOs or even some centralized entities that would like the ability to, you know, go risk on and risk off easily, especially now with rates coming up. It's a very strong use case. And I think what is interesting about the prospects of RWA and DeFi is the fact that there will be more different types of primitives built on top of that as a base layer. So once you have, for example, T-bills rates available on chain in size, you can enable a lot of other things. For example, on Pendle, obviously we have the ability to speculate on the direction of RWAs on chain. And I think there'll be so much more use case in terms of using them as collateral, using them as different services in DeFi.
Jesper? Yeah, do you have any practices on your protocol regarding RWA perpetual?
Yeah, so for example, Panoptic is, you know, purely on chain, it's permissionless, it's Oracle free as well. So the point is that, you know, we're very bullish on a future where, yeah, everything lives on chain and in a kind of a self-contained ecosystem as well. And yeah, having that bridge to the real world, I think is important. But yeah, once it lives on chain, you know, I'm also very excited about this kind of, you know, opening up to all these new things you can do now, like building new, you know, like primitives on top of that, building derivatives on top of that, having options on top of that, all kinds of stuff you can do. And you can even do things that TradFi, of course, can't do. And I'm actually very excited to see those kind of solutions come up as well in the future. So I think we can really also expand the economy quite a lot more in general, because things can get a lot more kind of fluid and can integrate much better and much more easily, and also become, ideally, in my own hope, less siloed. So for example, like the openness of Web3, I think is going to help us really work towards growing everything, the economy better. Like, so for example, if you look at TradFi, you have all these financial engineers sitting in one institution in a siloed, closed source environment, and then they go to another financial institution and they just implement the same thing and then the same thing, and it all's just a waste of time and energy, because how about we just implement it once or whatever, like a few times, and then we have that as a base layer, and then we kind of keep building on top like money Legos on top of all this, so that we keep moving things forward and come up with new, innovative, interesting solutions for everybody, and hopefully can provide more financial means and better like primitives to more people in general, like not just the elites and everything, but we can really bring more people into a better financial environment in general. So I'm very bullish on yeah, like bringing the existing world on chain, and then once on chain, I think it's a whole new universe that you open up. So.
Yeah, you're bullish in this like every sector, basically. That's great. That's great. Be very optimistic. And also, like, I wanted to know, what do you think are the challenges for RWA? Do you think it's lack of standards, or there's something else, or a regulatory perspective? What do you think are the challenges here? It's at a very early stage, by the way. So, yeah, maybe Mourad.
Yeah, I'll say definitely it needs to be more expressive, as you were talking about. I think, you know, I don't think we're going to expect lawyers to write Solidity code very well. So, you know, there probably needs to be some layer above that, and basically that's translating into security problems. You know, if you want something to be quasi-legal or enforceable in a legal way, then it sort of breaks the bearer asset thing. I do think there's a lot of synergy between NFTs and DeFi, even though they're sometimes seen as separate. But stuff like soul-bound tokens and stuff like this, or white lists on who can interact with a certain asset on chain. So I think security is the big one. Yeah.
Got it. Nick, how about you?
I would say there's also, I think a challenge is the interoperability with legacy systems in a sense. So right now there's like not that many ways for a legacy system to talk to a blockchain system. And I know like the guys at Chainlink are doing like their best to like bring this all on chain, but that would be like an infrastructure need that is very much needed for real world assets to become like a real thing. Like, okay, we have the custodian of the bank who's holding all these bonds, and then there we know the bank has the bonds, and then they can interact with the blockchain system and basically, you know, open this up to this global financial ecosystem that we're building. I also think for now, because we are still like kind of like a small ecosystem, us as a consumer, as the DeFi, DeFi is not big enough for people to like actively push from the legacy side things on chain. So it really needs to be a clear efficiency gain on their end for them to do that. Or we just need to bring so many people in with like a hook of some sorts that the consumer side grows, and then they will want to be on chain because that's where the consumer is.
That makes sense. You know, there is kind of like an investment cycle where it's kind of like you have the application and then infrastructure grows, and then it's application and then pushes to the infrastructure. So it's kind of like that, right? So right now we still need like more applications on chain and doing DeFi, and then maybe when the user base become larger and larger, and then it will push back the regulatory perspective as well as like the infrastructure as well. Yeah, so how about like Ken? How do you think about the future of RWA as well as its integration with the DeFi?
I think RWA's, the current biggest challenge is probably on composability, because a lot of products like T-bills on chain are very permissioned. They're very behind KYC walls, for example. But I think the industry has been innovating on that front to come up with, say, money markets that leverage on T-bill tokens as collateral, and then using those tokens that you borrow to be more fungible across DeFi. So I think seeing some trends there. And I think as we see more developments, not just in RWAs, but even other spaces like ETH restaking and whatnot, I think those concepts potentially could apply as also to T-bills.
How about YaoYao?
RWA is a promising frontier, and right now many old DeFi protocols they have started to target RWA track. I know that MakerDAOs their RWA accumulation exceeds to $2 billion. And generating like $1 million in revenue. I don't remember the specific number, but pretty much like this. The true potential of RWA use cases is yet to be fully unlocked right now. But they are present on the market. So I guess maybe other DeFi protocols, maybe they can figure out how do they improve their protocols to with RWA expect like you told the compatibility, and I think that's important,
Yeah, great. One final question. I think this goes to you all. We're talking about a lot of challenges in DeFi, but I also wanted to know, do you guys see any opportunities, and in which direction do you think it will grow massive, like maybe in the next 1 or 2 years? And maybe talking about your project a little bit, like which direction you wanted to go. I want to hear some secrets. All right, let's go with Jesper first, and then.
Yeah, that's an easy one for me. I'm very bullish.
Bullish on everything.
I personally think that so talking about the project a little bit at Panoptic, we really want to see the options side of DeFi grow quite a lot more than it has. It's still quite suppressed. So we want decentralized, permissionless, fully on-chain options to really become a thing, because any financial ecosystem that's healthy has the 4 pillars, including futures, but then importantly also options and so on. So that's what I would love to see, really. It's kind of just like also get more like just comfortability about stable yields I think is very important, because the capital I think is just a little bit scared and uneasy, because they're entering into this system where everything is much more turbulent, but having some sort of stability, which then RWAs can help with, and other protocols, of course, also on this panel we'll hear about, but just like creating like just a healthy ecosystem as a baseline, so we get that capital on chain and into the industry. And then they can always kind of go from there and do more risky things as they like. But the fact that they're not even want to go on chain yet, right? Because it's like all just, unfortunately, a lot of hacks and not predictable yields and stuff, I think is hindering the space. So so what we hope to do at Panoptic is really to bring options on chain and grow that and make that work in a fully decentralized, permissionless manner. So that's what I'm hoping to see.
On my side, as a trading firm and a regulated trading firm at that, we would like to see more institutions get comfortable and whatever they need around that. So any innovation in that direction is sort of where we're keeping our eyes focused.
Well, for gains, I think where it's going to go is that, like a couple of years ago, everybody was trading at centralized exchanges, right? Now it's more like 40-60, like on-chain volume, spot volume versus 60% centralized spot volume. And a lot of that is also like HFT arbitrage opportunities. But if you look at the perp space of the perpetual futures volume, only 1.2% is happening on-chain. And we think, or at least I believe, that we're gonna follow trend with spot. And it's such a massive opportunity. And I really think at Gains we're basically just at the start of where we're gonna be. We already showed with our recent updates that we can do things that nobody else can because we are on chain. And that is where the power of blockchain really shines, like doing these things that you're only capable of doing them on chain. So I think Gains is basically, our architecture is the best when it comes to capital efficiency. So with the lowest TVL, you could trade the largest position sizes, and that is the powerful part of our protocol, basically. And at some point in time, I believe that we're going to be everywhere, basically. And I know that our team is the one who's going to, like, you know, clear it. Like, we are the team that's going to do it. I think we iterate faster than anybody else, and yeah, we're going to see massive growth on the on-chain perps, and we are going to be number one.
For Dodo, we are still focused on the liquidity efficiency, and that's what Dodo V3 is building to, and we are focused on the market making strategies, especially for the small market makers. Yeah, we are trying to provide these flexible tools for those market makers, yeah, to help them to earn the best benefits on our Dodo. Yeah. For other aspects, I would like to say I really like the RWA. Just like I told, I think it has a huge potential, and will release the huge potential in the future. Yeah. No one can say when DeFi reach the next $1 trillion milestone, but I believe those of us, we have reason to believe that we will get there soon or later. Yeah.
Yeah, just echoing what Rick just mentioned, I think we're starting to see more and more things that used to be only able to be done on CeFi, like exchanges and lenders like BlockFi, for example. A lot of that can now be done directly on DeFi. You see like GMX and GainStrade, very seamless experience, very similar experience. And I think I would like to see more centralized platforms utilize DeFi as the backend. So a simple example would be for Pendle, we have Pendle Earn, which is a modular way to plug in our service into exchanges. Most recently, we've seen adoption from exchanges like OKX, who's adopted Pendle Earn as a way to get fixed rates on their platform. So we'd like to see more of that.
Hi. Totally agreed. And I also think like the smooth, seamless user experience of like trade on different platforms is important for DeFi protocols as well. Great. I think we have a great panel. Do you have any last questions or last words to the future of DeFi? Maybe just say one person, shout out one sentence to the future of DeFi, and then we're going to end today's session. Okay, Jesper, don't say you're bullish on everything, okay? Yeah, let's go with the YaoYao.
Very simple, long DeFi. Yeah.
Okay.
Yeah, I think, well, it's going to be quite invisible, I think, in terms of the developments of DeFi. It'll be basically the plumbing of CeFi.
Try gains.trade.
Nice.
Let's bring everything on chain.
I am not bearish.
Great. Thank you all. Thank you all. I hope you enjoyed the panel, and thanks everyone for attending this panel. Thank you all.